Most retail traders see a massive green candle breaking through resistance and think one thing: buy. I'm missing out. They jump in, only to watch the price instantly stall and reverse, hitting their stop loss before they even finish their coffee. Why? Because they missed a tiny two-candle clue that the market was literally losing its breath. Today, I'm showing you the Harami and its deadly cousin, the Harami Cross. In Japanese, Harami means pregnant, and today you're going to learn why this mother and baby duo is the most reliable signal that a trend is about to die. If you want to stop getting trapped in fake breakouts and start catching reversals like a pro, stick around. We're going deep into what Japanese traders call the petrifying pattern. Let's get technical. A Harami isn't just two candles. It's a specific psychological shift. To spot one, you need two distinct components. First, you need an unusually long real body, either red or green. This is the mother candle. It represents extreme momentum. The bulls or bears are running at full speed. Then comes the baby. This is a small real body, often called a spinning top. Crucial correction. I see this mistake on YouTube all the time. People say the entire second candle must be inside the first. That is incorrect. According to the original Japanese rules, only the real body of the second candle must be contained within the real body of the first. See those shadows? They can poke above or below the mother's body. As long as the open and close of the second day are tucked inside the previous day's range, you have a valid Harami. Unlike the engulfing pattern, where the colors must be opposite, a Harami is more flexible. You can have a green-green Harami. However, for a high-probability trade, you want to see opposite colors. A long green followed by a small red is a much stronger signal that the vitality of the bulls is fading. Why does this pattern work? I like to say the market is losing its breath. Think about a bearish Harami. You have a long green candle. The bulls are in total control. But the next day, the price doesn't gap up. It doesn't even push higher. It just hesitates. It opens and closes inside yesterday's range. This vacillation is a massive red flag. It tells us the upward drive has weakened. The bulls are exhausted. The vitality of the move is gone, replaced by uncertainty. The same applies to a bear move. After a long red candle shows aggressive selling, that small second-day body suggests the bear's power has diminished. It's a moment of silence, and in trading, the silence is often more important than the noise. To really understand the Harami, you have to realize it is the exact reverse of the engulfing pattern. In an engulfing pattern, the second candle is the big boss. It swallows the previous candle and takes over the trend immediately. It's an aggressive takeover. In a Harami, the first candle is the big boss, and the second candle is the quiet witness. The Harami is subtle. It's a slowdown signal. While the engulfing pattern is a shout, the Harami is a whisper. Now, let's talk about the version that makes professional traders freeze, the Harami Cross. Remember the general principle. The smaller the second candle, the more powerful the reversal signal. Why? Because a smaller body means more ambivalence. In the extreme case, the real body becomes so narrow that the open and close are nearly identical. That's a doji. A doji preceded by a long, tall candle is a Harami Cross. Japanese traders call this the petrifying pattern. Why? Because it looks like the preceding trend has been frozen, petrified, in preparation for a massive reverse move. If you see a Harami Cross after a vertical green rally, listen to me carefully. Do not ignore it. This is the market telling you this smart money has stopped buying. While Harami Crosses can call bottoms, they are significantly more effective at calling market tops. Let's be detectives. Look at this point on the chart. We had a brisk rally. This third green candle pushed the index over the bearish engulfing pattern's resistance. Most retail traders are FOMO buying here. But look at the very next candle. It's a tiny spinning top. It's a Harami. In fact, the body is so small, it's a Harami Cross. Notice what happened next? A series of spinning tops. The trend shifted from up to neutral. Then, this long red candle completed a tower top. If you knew how to read the Harami, you would have exited your long position right at the peak. Example 2. Confirming support. Look at point 1 and 2 here. The price was dropping. It hit this horizontal support line and printed a Harami Cross. This confirmed the floor. The bears were petrified. What happened? The trend shifted from down to up. The Harami correctly forecasted the change. When a Harami appears, it doesn't always mean a 180-degree crash. It means the texture of the market has changed. Sometimes a trend goes from up to down. Other times, it goes from up to lateral, sideways. In either case, the Harami is your visual alarm. When that alarm goes off, it's time to scale back. If you are in profit, take some money off the table. Move stops. Shift your protective stops higher. Wait for confirmation. Don't just jump in. Wait for the next candle to break the Harami's range. This is where you become a professional. We meld candle charting with Western tools like resistance lines. A rising resistance line is an area of supply. When the price hits this line and completes a Harami, you have confluence. You have the Western tool, the line, and the Japanese tool, the candle, both telling you the same thing. Supply is overcoming demand. Look at this chart. The prior price peak was also a Harami. History repeats itself, but only for those who know what to look for. We are all detectives in this market. Every candle is a clue. The Harami is one of the most honest clues the market sends out. Pro tip: if you see a Harami form on a weekly chart, it is 5 times more powerful than on a 15-minute chart. Always check the higher time frames before you commit. If you found this deep dive helpful, hit that like and subscribe button. Check out my other video on the 5-step checklist for trade entries to see how I combine these candles into a full strategy. Drop a comment. Have you ever been caught in a fake out that started with a Harami? I read and respond to every single one. Trade smart, stay patient, and I'll see you in the next video.